Hello. The bitterly cold weather has dominated the headlines this week, although in some respects the market has been calmer than you might expect. Let's look at the details. Largely unaffected by the weather, oil ticked up less than $1 on Monday, with Libyan production affected by unrest at the El Feel field. Tuesday saw the market softening, with Vladimir Putin's ordering of a ceasefire in Syria, easing geopolitical risk in the region. Wednesday saw more significant softening, with discussions between Iraq and the Kurdish authorities about the resumption of exports from Kirkuk and gains in US stocks pushing prices downwards. The bearish market continued into Thursday, with a strengthening US dollar adding to downward pressure. Brent crude closed last night at $63.37 a barrel. That's down $3.60 on Friday, although part of that movement is due to the change in the front month moving to May. Monday's market saw falls as the risk factored in towards the end of the previous week was reassessed. Although the weather outlook remained severe, forecasts were remodelled to reflect a shorter expected duration. With the market correction having taken place, Tuesday reflected the immediate prospect of record demand for Wednesday, with gains most evident in prompt and near-curve contracts. Wednesday and Thursday's markets were affected by record demand and the consequent gas deficit warning, along with supply outages. The most noticeable gains were on day ahead, which closed at 190 pence per therm on Thursday, having peaked at even higher levels previously. The gas deficit warning having been withdrawn, higher temperature forecasts, along with weak oil and coal, have limited any gains. Winter 18 closed last night at 50.6 pence per therm, and that's down 0.65 pence per therm on last week. Monday's market reflected the theme of downward correction and also an improved renewable outlook. The market was tighter on Tuesday, with unplanned outages and exports to France adding to the bullish pressure from gas. A weak fuel complex on Wednesday and higher wind inputs meant the market was mostly slightly bearish, the exception being March, which gained strongly day on day. Spikes in gas were reflected in prompt prices on Thursday, although gains on the curve were much more muted. Winter 18 closed last night at £49.30 per megawatt hour, and that's down 45 pence compared to last week. You can download the full version of this from our website. Thanks for watching, and we'll see you next week.